All right, good afternoon, everyone. So today is Wednesday, the 7th day of May, 2025. Can you believe that? 7th day of May already. Um, I'll get into that stuff in just a minute. Today, I want to do some trading, but today we had FOMC come out. All right, I'm going to do some live trading here with you in just a few minutes, but we had FOMC come out right now. The FOMC conference is beginning. So the market's likely to be pretty volatile. Now, one of the things that I wanted to show to you when you have big news coming out like that, you see how there's a spread in between the bid and the ask right here? That is money that you're going to lose as soon as you place a trade. Okay? So you don't want to trade markets that are like that. Not when you're scalping. You don't want to trade markets that are like that. As a matter of fact, if you look at the liquidity here, it is very, very thin. See, it's jumping around even more right now that Jerome is probably starting to talk. You see how there's gaps in liquidity? You don't want to trade markets that are like that. All right, the market is trading really thin. That means if I put a 10 contract trade on, just my order will take up like 5 spots. That's just my order. All right. So we're going to avoid that right now. If you go to the ES and you look at the ES, you see it's more liquid, but it's still jumping around a lot. Now it's more tradable. The ES is a little more tradable than the NQ clearly. The other markets that I normally trade, the Russell, it's got a gap right there, so we're not going to trade the Russell right now. And the gold. Here's the gold. The gold's got a gap also. All right. So if we're going to trade anything right now, it would be the ES, but I'm going to give it a couple of minutes. Let the things die down just a little bit. So, what I want to get into with you, there's, if I'm going to start doing this stuff, where I'm going to be doing some live trading with you on Wednesdays, then I want to do a little training with you as well as doing the trading. And so there's just basic stuff that a lot of you guys probably don't know that you probably should know. And and if you get the indicator set, if you get the TV trades, which to get TV trades, you go to tvtrades.com. To get the TV trades, you got to go to tvtrades.com and and sign up for it. Here? No, not there. Here. tvtrades.com, and just click on any one of these orange buttons. These right here to bring it down to the bottom. It's $25 a week after the trial. There's actually a 4-day trial right now, but it's $25 a week after the trial, or $90 a month after the trial, or $9.97 a year after the trial. The annual is obviously the best deal. The monthly is the next best, and the weekly is very cheap to get started if you want to. But once you have the indicators, you get the indicators, and the indicators give you a bunch of information, like TV trades, for instance, with the alerts. You can choose just the TV trades, and in here I have custom alerts for all different things in here. Now, I'm not going to get into a whole bunch of the stuff that it has right now. Not right now, but 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 some of the things that it gives you in here, you probably don't even notice. There's like that one right there, and that basically lets you know whenever you go into the overbought, the oversold, where the background color is right. Okay. It lets you know when you go into the overbought or into the oversold where the background color is right, because usually the bar right after that is going to be a trigger. Okay, usually the bar right after that is going to be a trigger. Now, using that information, I want to show you some other stuff. All right, if you can grasp that little bit of information, I said I was going to stick with the ES for a few minutes here because the ES is the only thing that's really liquid enough to trade. Let me slow down. Those were a lot of words in 5 minutes. And I don't know what just happened there, but it'll come right back up. You see the blue arrows right here? Those are what is turned on by default with TV trades. Now this is getting a little bit annoying. Those are what is turned on by default with the TV trades. All right. If you just put TV trades on, you get the blue arrows only. It shows you the long trades that trigger usually at the beginning of a trend. All right. And if you wanted to have an alert for when that happens, you would come in here and do TV trades and come in here, and it would be buy alert and sell alert. That's what it'd be. The buy alert is what you would have an alert on. Come down here, do once per bar close, give yourself a message if you want. You can determine how you want it sent to yourself and notifications. The different kinds of notifications. Like this is what sends it out to a Telegram channel. So you can have it play sounds and send emails, notifying the app, like the things you see popping up over here on the side. You set that in here. All right. And this works great for everything. This right here happens to be the ES on a 7 range, but if we stick it on Apple, we'll say just randomly Apple, and We don't want Apple on a 7 range, but even on the 7 range, you could see right there on the 7 range, it was looking pretty darn good, wasn't it? It was nailing it right there. But a 7 range is 7 cents per bar, so that's probably not going to work. But a 100 range is $1 per bar, and you see it still nailed it pretty well there. It's only showing the long trades here by default, by the way. You got to turn on the short trades. If you want to see the short trades, you got to come in here and turn them on. By default, they are not on. Right? So now it'll show the short trades. Okay. You see, and you can have them both on if you want. But I just want to make this clear to you that there's a whole bunch of different things that you can do. Now, what I'm going to do with you today, is kind of a mix of things. Okay, we're going to be looking at things that you can turn on, that you don't have to turn on. But for right now, I'm just going to shut off these guys right here. And I'll go back to this for right now. Okay, because right now what we're interested in is when price gets into the overbought or gets into the oversold in the direction of the background. Okay, that's what we're interested in. Now, that's when we're going to trade. All right, well, that's near when we're going to trade. All right, so there's some other basic stuff that you should know. Now, I go into this a lot more during the regular training sessions that I do in the morning. But if I'm going to start doing this on a regular basis, doing this extra half an hour where I'm actually going to trade live for you guys, and you guys get to watch me for an extra half hour live, then there's other stuff you should know. There are other things that I look at, right? So you got to have the right kind of background color. You got to have the trigger in the right place, okay? And there's different ways to do this. The conservative way is to do it when it comes out of the overbought with the right background color. The aggressive way is to do it when it goes into the overbought with the right background color. Okay? So conservative, when it comes out of the overbought with the right background color, be selling the down close right there, be selling the down close right there, be selling the down close right here, right here. The aggressive way is when it goes into the overbought. So you'd be selling the up close right here. Be selling the up close on that bar, the open of the next bar. Okay? You'd be selling the up close of this bar, the open of the next bar. Alright? You see the difference? You'd be selling the open of this bar. You guys see that? Those are really the different types of trades that I do. And you know those numbers like you saw on this page up here at the top, all this stuff up here, all these big numbers, that's where they come from. Me doing conservative and aggressive trades. All right, this was my best day of the year. $39,399 with one contract. Not with one contract. I'm sorry, with 10 contracts in 2 hours that day. That was a big day, but this is basically what I'm doing all the time. Okay, and if you guys don't get in there to see me do it in the morning, well, now you can watch me here. Please go over. Please go over it one more time. You thought you had it for all this time. Okay. All right. The yellow arrows trigger when it goes into the overbought and the background color is red. You're gonna get a yellow arrow. Every time it goes into the overbought and the background color is red, you're gonna get a yellow arrow. All right, yellow down arrow. Now, the action that you take, it depends whether you're trading aggressively or you're trading conservatively. All right, if you're trading aggressively, you're just going to sell the open of the next bar. Okay, like you'd be selling the open of this bar right here. If you're trading aggressive, you'd have been short already on this bar. You'd have sold it already. If you're being conservative, you'd wait till the bar gives you a down close. All right, everybody good with me on that? Now let me bring my ES over here so we can place some trades if I see something worth trading right now. See right here, what I want to explain to you guys is there is a time to trade aggressive and a time to trade conservative. All right, so let's just explain the advantages and disadvantages, or what to really look for. Okay, now when you're in chop, did I do trades on the? I did do trades on the NQ today. No, I'm selling the Apple. You're right. I did do trades on the NQ today. Thank you for pointing that out, Rico. I did do trades on the NQ today. Let me slide this off to the side. I did do trades on the NQ today. I only did a couple of trades, but I was up 52 ticks with those 52 ticks with one contract for those couple of trades that I did. Okay, so this is the S on 100 range. Now I've been trading the S on a 7 range in the morning, so I'll put it back on the 7 range, and we can watch this. Okay, on the 7 range. Now this is a good example of what I want to point out to you. All right. When to switch between conservative and aggressive. All right. Now, almost every meeting I say the same thing, right? I say the markets are always doing the same thing. They go up and down, right? And so when should you get in at this point, and when should you wait to get in at this point is a real question, right? So the aggressive is going to be when it goes into the oversold right here. It gets down into the oversold like this. That's going to be your aggressive. The conservative is going to be when it comes out of the oversold like this right here. You're going to enter right there instead. So the issue then becomes, well, how do you know which one to do? And and what's the difference when you switch in between them? And that's a good question. All right, so let me show you a few things about this sort of decision-making process. Now, this is stuff, I'm just showing you a better way to trade where you're not just being a robot and taking every single trade. Okay, because just being a robot and taking every single trade can lead to overtrading, and if you get into a bad string of them, it can lead to the loss of confidence. So I want to make you better traders. All right, I don't just want you to be robots. You can't just be robots if you want to. If that's what you want to do, you can't just be robots. And I know that that's what some people want. They just want something that says here, buy here every time, and you can do that if you want. All right, you can even take it a step further and say, no, I'm only going to take long trades ever. I'm only going to take long trades, and if that's the case, then you just wait till you have long trades, and you only take long trades. If you want to be that way, that's it's totally up to you as a trader. But I wanted to educate you just a little bit on things that you may or may not know, that I may or may not have already said. But I know I'm recording this right now. I hope. Yes, I am recording this right now. So things to look for. Okay. Now, I kind of like to stick to the 50% retracement levels. All right. Now you can call it a fib if you want to. I mean, the tools that I use, they call it fib retracement levels, but it doesn't matter what you call it. It's a 50%. It's a number. It's a numerical level to me. The fact that it's a fib thing that I'm using, a fib tool that I'm using, a retracement tool, the word fib, don't be bothered by that. Don't put too much into the word Fibonacci, because that's not the meaningful thing here. The meaningful thing is the level that you're looking at, the actual number. Okay, so like right here, see, this has gone down this far. It should retrace up to right here. So this is the point where you'd want to buy that, or sell that. I'm sorry, right in here is where you'd want to sell it. Now, knowing that information, if you had an opportunity down here to sell it in that spot, and this was the opportunity right here to sell it in that spot, then you make the decision whether you're going to do aggressive or conservative. All right. So if you're doing aggressive, then you would sell it at the open of this bar. After this yellow arrow right here, you'd sell it at the open of this bar. And if you had done that, this is a 7 range. So if you had done that, sold it at the open of that bar at 33.75, it ran down really quickly down to 33. So it ran down to 30. So it ran 15 ticks. 15 ticks. Now that may not seem like a lot. If you have a micro on, it's it's only like $15 or something like that. But if you have 10 contracts on, well, if you have just one contract on, it's $187. If you have 10 contracts on, like I typically trade, it's $1,875, and that happened in like 5 seconds. And on days like today, the markets are going to be a little crazy, and you're going to get a lot of that. And I am going to play some trades here. I'm not just going to be talking about it the whole time, but I wanted you guys to see the things that you should be looking for. Okay, so like right here, you have this leg length. If it pulls back up to right here, this is an area you'd want to sell. All right, if this gets up into the overbought on the next bar, it didn't. So if it gets up here into the overbought right here, you'd want to sell it right there. Okay, so now it's extending down further. So now the number that you're going to be looking at is going to be right about here. All right, That's where you want to sell it. It's going to take 2 bars to get it up from the oversold up into the overbought. It's going to take a minimum of 2 bars to get it from the oversold into the overbought. So now that level just turned, it just moved down, right? And now you're here. It's going to take 2 bars to get it from here to the overbought. Oh, wait, I guess it didn't. So you could sell it right here. Now, that's not the best place to sell it. All right, it's not the best place to sell it right there. It's worked out a little bit. You would have gotten a break even on that. If you would have sold it on the down close where it came out, done the conservative trade, you would have gotten a break even on it. If you would have sold it aggressively at the top, you would have gotten more than a break even on it. But either way, it's not the best place to sell it. All right. I know I'm talking fast right now because the markets are moving fast, but let me do something. Let me do something a little bit different here for a second. Okay. Here, let me do this so the markets aren't moving, so I'm not talking so fast. Okay, so I'm not looking at moving markets and moving targets and all that stuff. So right in here, this was roughly where you want to sell it. It's 50% of this right here. And this leg length right here is determined by, here I have to use this thing, is determined from when it went out of here and went back into there. It is going to be the low right here before it went back up into there. That's what gives you this leg length. It gives you the start and stop position. And then that gives you your retracement level. So, you know, I was eyeballing that, and so the retracement level should be 50% retracement, and the retracement would be right about here somewhere where I did that. That's the optimal place where you want to place a trade. Okay, that's the optimal place where you want to place a trade. So think a couple of steps ahead right now. When this happens and you're all the way down here and this is in the oversold, right? You're in the oversold right here, and then it pulls back up and it suddenly gets into the overbought. Remember what I said just a minute ago? I said it's going to take a minimum of 2 bars to get it back up into the overbought. And there it is, 1, 2, 1, 2. Gets it back up into the overbought. This is not the optimal place to place the trade, right? If you would have shorted right there, it would have worked out. That's fine. But if you did short there, there's a very high probability, that if you shorted right there, your stop is going to be exactly right here. Your stop is going to be right here, right at the 50% retracement. Now, there's a reason these are pivots. All right, there's a reason these are pivots. There's a reason. I mean, I went over this a couple weeks ago in setting the stop loss thing. There's a reason those are pivots. You don't want your stop to be at that point. You want your stop to be down here, or your stop to be up here, away from those pivots. Okay. If you would have taken this short right here, I mean, it looked like it worked out okay. You would have gotten your stop to break even anyway right in here. It went down far enough. If you would have done the aggressive trade, you would have been able to take some pretty good profit. But if you would have done the conservative trade right here, it had to go 4 ticks into profit to move your stop to break even, following my rules anyway. So you would have gotten a break even on that trade. But it's not the optimal place to place a trade, right? You want to let it pull back into this area. You want to enter right up in this area. Okay. I know those were a lot of words. Is everybody with me on this so far? Everybody following along with all that? Okay. There was one fella that signed up for the trial today, and he gave me an invalid ID. You're going to have to give me the right ID for that. I sent you an email. All right. So, knowing what I just said right there, okay, the time to place an aggressive trade is if this goes into the overbought when you get to this point. All right, if it goes into the overbought, when you hit this level, sell it. All right, if it goes, if it goes here, we'll say, and then the next bar closes up here, and it goes flat in here, then you wait for the conservative trade. And you sell it when it gets out of the overbought. But it's got to get out of the overbought somewhere right around this level so that your stop is still going to be above that level. Okay? So it's just thinking a couple of steps ahead. All right? Like right now, this didn't, because the background changed on this, didn't turn into a decent trade. But using the same theory right here, if I shut that off, using the same theory, this right here is what our leg length was, right? So right in here, once it went through it, And after it comes out of the overbought, it's got to go down before you can take another trade in that direction. So this didn't turn out to be a great spot. But this one right here, this would have been the spot to sell it, right? Remember, this is what I was drawing a minute ago. This is what I was working with a minute ago. Hang on, let me remove this guy. This is what I was working with a minute ago. And so right there where I drew that line is exactly the spot you want to sell it. Right here, where it went into the overbought, right there, is exactly the spot you want to sell that. An aggressive short trade from right there would have just given you a ton of money right there. Do you see that? So if we go back to that picture, where was that picture? Let me find that picture and bring it back up. That's not the picture. Here's the picture. Okay, if we go back to the picture and we look at what was happening here. Now you don't have, hang on, let me slide it all the way over. Yeah, here. So we were at this point right here when I took the screenshot. Now you don't have the arrows on this because I shut the TV trades off. But this right here, what I was just saying, if it pulls back up into this point right here and it goes into the overbought, that's exactly what I just said. This point right here and it goes into the overbought at the same time. That's when you want to do the aggressive short trade. Do you guys see that? Okay. It's pretty good stuff. I mean, and this is what I'm doing all day long. Well, not all day long, but in the morning session anyway. This is what I do when I trade, right? When I trade, I look for the opportune moments to place the trade. You have all the tools that you need. You know, if you got the TV trades, you have all the tools that you need, and you really don't need to do anything else. You don't need any more tools. I'll say that. You don't need any more tools. And I'm just scratching the surface with the tools that you actually have. You know, there are so many things that you can do with this. You see, I just have the basic range trigger on down here. And if we were to go and put on the optimum trigger, I'm not going to put the password in right now, but if we were to go and put the optimum trigger on, then you would have more opportunities. This is a great spot to trade right here. Where's my yes? It's a great spot to trade right here. Here it is. Okay. So I just sold right here. I think I sold a little prematurely. I should have waited until the close right there at that bar. I should have sold the open at this bar, not the last one, but it should work out for me anyway. I got excited about it, but I figured it stopped me out. Crap. I should have sold the open of the other bar. This is what I was looking at. Let me show you what I was looking at. From here down to here. This was the retracement right here. So I guess I sold in the right place, but now it's switched around, and I got, you know, if we're going with the trend, I'm not sure what trend we're in at that time. Yeah, we're in the right one. Okay, so right now an up close on this bar right here would be an opportunity to go long on that. Okay, an up close on that bar right now would be an opportunity to go long. And there it is, and here it is, and so I'm long. And right now my stop's going to break even, and so I stopped out 10 ticks on that last one, and I just made 12 ticks on that so far. And 16. And that's a 25 target up there, I think. Oops, I just had a lot more in that. I should have taken more. But we just got everything back that we just stopped out on. But this is exactly the same thing, just in the other direction. I shorted it right here. All right, I should have waited to the open of that bar, and I would have been able to get my stop to break even, but I got a little trigger happy on that one. But this was the same thing in the opposite direction, right? We had this right here. We came out right here. We had an opportunity to short it. To go long right here. Now I'm pretty sure that the background color changed if I put this back on. Yeah, we went back into blue right here. So it was after this, I went long. Okay, when it gave me the opportunity right here at the 50% retracement, I went long. So I just picked up 12 ticks on that. I lost 10 on the first one. That was a mistake, and I picked up 12 on the second one. Okay, what tool did I use? Okay, all right. Yeah, well, this is really jumpy for the ES right now. You know, the NQ is probably crazy right now. You know, this is what the NQ looks like right now. All right, that is really jumpy. Yeah, you see I have all these gaps in here in your depth of market. That is not anything I want to trade right now. I'll kick that to the side, and we might be able to get into that in a few minutes here. Maybe in a half an hour or so, that might settle down. But what tool did I use to set the retracement? Let me show you that, okay? Oops, not that. Sorry. I was going to shut that off again for a second. So you just look at the market there like this. You just look at the market, and using the tools that we have, this is just a retracement tool, right? Now, remember I said don't get caught up on the word fib. It's just a retracement tool. And inside the retracement tool, you can set it up to have levels that any of these numbers. Now, these are all fib numbers by default, but you can make them any number you want them to be. You could have one at 0.25 and one at 0.75 if you want to, but I just use these numbers. I use 0, 1, and a half. And I make the 0 and the 1 I have selected white because my background color, I have that selected white. In the half, I make maroon. So you can clearly see the difference in here. Now I could set this a different color so you could see a little bit better. Maybe if I set that to blue and this to blue, this to blue. You can see the difference between the two of them a little bit better. But it doesn't really matter. All right, that doesn't matter. This was a good trade right here, the way this came together. Now, it's kind of a good trade, in a sense. It's not that good, really. The reason I say it was good is because it came down to hit this level right here, which was pretty much 100% retracement of this leg. But this leg isn't the important leg. The important leg is actually from right here to right here is what you're looking at for the important leg. And right now, still trying to figure out what the important leg is. Okay, so right now, the leg is going to be, we're looking for the retracement right now. We need it to get back up into the overbought. Yeah, let's get rid of this for a second. We get rid of that and get rid of the other one. And we'll get back into it here. All right, so you draw a fib like this, and then you get your retracement, all right? And then you get all the way up here, and then your fib becomes like this, right? And I'm calling it fib. It's just a retracement tool, all right? And then you get a new swing high, so you go there, down to here. And then you get a new swing high, so now you're going there, down to here. So do you have an opportunity to enter at the midpoint or at the swing low of this? Well, you kind of did, but this is really crunched up. So you might want to just wait until it spreads out a little bit. And here, now it is spread out, and this is what you're looking at. Okay. I'm not going to do anything right here. What I want to see is just get up into the overbought like that, and then pull back again. Put in a higher swing right here would be better, and then pull back again and give us another shot at it. That's what I'd like to see right here. Why do I use range bars and not candles? Well, Ralph, range bar, you mean candlesticks, right? That's what you mean. You're talking about candlesticks. If I go here and I change this to candles like that, that's what you mean. Right? You can use whatever you want. It gives you the same information. I used to use candlesticks all the time, but when I first went to TradingView, they didn't have candlesticks on range bars. Okay, and they didn't have them on it, so I had to use open, high, low, close. Because I mean, for over a decade, I had been using the candles, but I got used to using these, and I actually like these better. It's cleaner and it's easier to see. If the question is why do I use range bars as opposed to like minute bars or time-based bars or anything like that, well, that's a whole other answer, and I can get into that if you want me to. I can also give you a video that you can watch about that. I posted a video out here to Jessica and Hannah just the other day, I think. Let me go see. Here's Hannah's ID. This one right here. I'll stick this video in here for you if you want to copy link. And here. I do paste and send to all. That link that I just put in there is to a YouTube video that I did about why I use range bars. Alright, I'll explain it to you right now, but well, I won't explain it to you right now. Wayne's trying to keep me on point here, and and he's not wrong. Okay, so the fib tool, this is a fib retracement tool. It's this thing right here. Okay, if you go over to the side over here, it's called the fib retracement tool, not the fib extension, the fib retracement tool. If you star that tool, it'll put it up in a little toolbar like that. If you star anything you like over here, like those three things, it puts them up here. Okay, the things that I use all the time, like the horizontal lines, the up-down lines, all that stuff that I use all the time. If you star it, it's going to stick it there for you. Like I should probably star a trend line. It's going to stick it there for you. All right, so you have easy access to it. Okay, so this right here, I don't know what the right now it's looking like it's a downtrend right here. I'm not really sure, but if I put the TV trades back on, if this is a blue background, then this is a good spot to trade. Right there was a good spot to trade. Okay. The reason that was a good spot to trade is because he came off a 50% retracement spot right here. All right. Now, I did that without doing the fib tool, but he came off a 50% retracement spot right there, so this would be a good spot to trade. Now, we're back in the blue right here. We didn't really get any leg on that, so we need to get out of the chop. If you want to trade in the chop, you can do that. All right. There's different ways to do it if you want to trade in the chop. Does anybody want to hear about that? All right, well, it's 3 o'clock. So I did place a couple of trades. I had one good one and one not so good one. The not so good one was a mistake. I shouldn't have placed that trade. But the good one was exactly what it should have been. Let's take a moment and just go back and look at what's happened right here. Okay? All this stuff that happened right in here. Now, we had some really big leg lengths. When you have longer leg lengths, you don't want to be aggressive when you have longer leg lengths. Unless you have a chance to be aggressive at a turning point. Okay. The trading and chop. Okay, let's get into that just a little bit. If you have chop, like right through here, if you have chop, then that's when you want to be looking at, first, there's 2 different ways to do the chop. One is doing the chop with the trend, and one is just doing the chop. Okay. So just doing the chop is aggressive trading, really aggressive trading. You got to be really good with your dom. You got to have really good risk management skills. Okay, that is if you're trading, just trading the chop without using the background color, without using the trend at all. All right, and if you're going to do that, then you need to have divergence. So you need to go in here and put on some divergence. You could do either the div area or the div line in here. If you make that a line and make it black, turn that on and shut that off. You see what I just did right there? Do that, and then put the password in, which I don't think I can do off screen here. I guess I can if I spread this out. I can do it off screen. Hang on. Let me see if I can spread this out a little bit. Drag it this way. Okay. There. So I can do it over here on the other screen because you're only seeing one screen. If I put the password in and I hit style now and hit OK. Now I gotta do it again. Hang on. Hang on. Let me slide that over here and let me go to inputs and do that and hit style. And that, no, not that. Hang on. Something is not coming up properly here. That could be it. There it is, I believe. Alright, well that is not working the way that I wanted it to. Let me put something else on there. I can put something else on there that will make it work the way I want it to. And go here, and we'll just go here and throw that on there. Alright, and then we'll move that up to existing pane above. Okay, so here. You have this, or something very similar to this, in the TV trades range trigger. But to be really aggressive in the chop without the background color, what you're looking at now is when it goes into the overbought or into the oversold, when the blue leads into the overbought or into the oversold by itself. All right. Now, the markets have been trending a lot lately, so I haven't been trading this way very much at all. Like right here, you would short right now. Right? You would just short it right there. At the open of that bar, you would short it. Here it is. Sorry. I'm going to put my stop to break even. You just short the open of that bar, and I'm going to lock in. There's 8 ticks and 12. I didn't get 12. I got 10. I'll leave my DOM over here so we can watch it if I place any more trades in that manner. Right here, I would buy the open of that bar. It's too late, but I would buy the open of that bar right there. I would have just bought the open of that bar with the blue led into the oversold. That is how you trade the chop really aggressively. All right, I would just bought the open of that bar, and now I would just sell it right here. Oops, there, I sell it right there. Okay, so now I'm going to bump my stop to break even after 4 ticks in profit. Now I'm going to lock in 4 ticks in profit, and lock in another 4 ticks in profit. There's 8. And the blue did not lead into the oversold right here, so that's not a trade going back up right here. Okay, that is how you trade really aggressively in chop. All right. Now, not everybody's going to be able to do that. Not everybody's going to be able to do their DOMs really fast and be able to bump all their things around like that really quickly. That's the most aggressive trading in chop. Now, you don't have to do that. Like right here, I'd be selling right there. Okay, and it's too late. I missed it. It's already gone 4 ticks into profit, so I missed that one. I would have gotten a break even on that one had I gotten filled. I would have gotten a break even when it went down to right here. But that was just the blue leading the black into the overbought. All right, now that is really aggressive trading. But you don't need to do that. All right, there's a midpoint. There's a level in between all that. All right, where you can do aggressive trading with the trend. So like if it's red and you get the yellow arrow like this and it's red and you want to be aggressive, you just sell as soon as it gets up into the overbought. All right, and then you're only looking for the yellow arrows when it gets up into the overbought. You just sell when it gets up into the overbought. Now you want to sell when it gets down into the oversold, like right here. If you want to be really aggressive, you'd sell right here. And now it's gone too far into profit, so I got to cancel that. But hang on, is Ronnie in here? Ronnie is not in here. What the heck, man? Hang on. I hate doing this when I'm in the middle of something. Okay, I hate doing that when I'm in the middle of something. People can't get in. So you would just buy the open of this bar right here. When it got down into the oversold, you would just buy the open of that bar, right? And now you would wait again. You have a blue background. You just wait again for it to come down, get into the oversold. And as soon as it gets into the oversold, like that, you would just buy the open of the bar. I'm late on this one, so I'm going to bump my stop to break even right away because I'm late on this one. All right, so now I'm just going to lock in a couple of ticks and get out because I was late getting that one on. But so far, I think I've taken 5 trades and I've had 1 stop out, and that 1 stop out was my fault. But you see how simple it is, right? I mean, you can make it as difficult as you want to, or you can make it as easy as you want to. When you're trading in chop, if you want to be aggressive and you want to be with the trend, if you have a blue background, you buy as soon as it goes into the oversold. All right, you buy as soon as it goes into the oversold. Keep in mind this stuff that I told you earlier. This is going to help you if you want. This is going to help you see the great opportunities. All right, when you get this opportunity right here, you bought aggressively at the open of this bar when it got down into the oversold. This right here, when you draw this, if you draw that, if you're fast enough to get the drawing down, that's your leg length. It should do that again. All right, and then this becomes your leg length, and it should do that again, right? You guys see that, right? It's not hard. I mean, this is over and over and over again. I mean, I've made thousands of dollars so far in this session. Of course, I have 10 contracts on, but with 1 contract on, I've made hundreds of dollars. But you guys see it, right? It's not that hard. Did I win the last one? I've only stopped out on 1. Masood, so yes, I did. I got 2 ticks on that last one that I took that I was a little late getting into. I got 2 ticks on that. Okay. So, let me slow it down a little bit. I've been talking nonstop for 40 minutes now. The markets, I'm just looking at the ES right here. I've only taken trades on the ES. You can do this all with other markets too. I haven't looked at any other markets, but it's all the same stuff. Right? The ES is really the only one that's liquid enough right now to trade because there's still gaps and everything else. There's still a spread between the bid and ask and everything else. Wayne, single bar corrects when you buy at the open of the next bar. The open should be not all the time 2.8 ticks below the high. It's not necessarily going to be. It depends where the open was. with respect to the prior bar. I mean, the bars always have to close at the top of the bottom, but they don't have to open at the top of the bottom. Okay, Wayne? Like this one right here. And for those of you guys who don't know, I created a thing. If you have TV trades on, you know, I know everybody that trades, you always go back and you look at what's happened in the past, right? And if you look at a bar, you say, okay, well, this was the open and this was, you know, the high, so how much is that worth? And how many ticks was that? I did that for you over here. Okay, you see buy profit ticks and sell profit ticks. It tells you from the open of the bar to the top of the bar and from the open of the bar to the bottom of the bar how many ticks it is, right? And it does it on every kind of bar. It doesn't just do it on range bars. It does it on every kind of bar. You know, if you go to like a 5-minute bar, you know, it'll tell you here how many ticks it was from the open of the bar to the top and from the open of the bar to the bottom. Okay. So we'll go back to our 7 range here. Now, with the ES, what I had been doing in the last couple of weeks when the ES gets really volatile is I go to a larger time frame, the 19 range. I use a 25 tick stop on this 19 range. Okay, so that might be something that comes in handy. That might be something that comes in handy for you. And like right here would be your long trade, right? Right here would be a long trade. Now the stop on this is going to be 25 ticks. All right, and the target doesn't go to break even until you get on the 19 range until you get 10 ticks in profit. Okay, so I would have to change my bracket around to be on a 19 range right here. Looking at the way that this came together, if you were to do the retracement, you'd have to do it from back here. All right, it would be here. I took the trade, but here it is. Now, it's got to go, that's it right there. It's got to go 10 ticks into profit to bump the stop to break even, and it just went 10. So on the 19 range, you know, I made a ton of money a couple weeks ago on the 19 range because when the market's volatile, you can just go to a larger time frame like that. So now right there is a whole bunch of ticks. It's 25 ticks right there, I think. Yeah, that is 25 ticks right there. Okay, so we have, right now we have 16 ticks locked in, and now we have 20. Actually, that's 20. It's actually more than 25 ticks. Well, let me just move it up some more because it should be more. So now we have 20 locked in, and I believe it just took us out. Nope, we're still in. There. Okay, now we've got 24 ticks on that. What I was going to do is draw you this, okay, because it goes from here to, oops, didn't need to do that. It goes from here to here. So that wasn't the ideal place to take the trade. Right over here was a good spot because it came off of the midpoint right here. All right over here was not a good spot, but right over here was a good spot because it came off the midpoint, and that's why I just picked up those 24 ticks. So let's do the math on that. All right, now I placed a whole bunch of trades so far, but we'll just do the 24 ticks. The 24 ticks is $300. I have 10 contracts on, so that was $3 grand that I just made right there, plus the other 1875, plus all the other ones that I did. So in this session, you know, if I go back and look at all the trades that I actually took, you know, right now I'm up about 10 grand so far with 10 contracts on. Pretty close to that, 5 or 10. At least 5, closer to 7, I think. But you guys see this, right? I mean, it's not hard to do. It's the same stuff again and again and again. Now, I switched to the 19 range here because it was so aggressive. I mean, it was so jumpy on the 7 range. And I had to change my bracket around a little bit. In that particular trade, I left the stop in the same place because it didn't matter. It didn't go against us but 1 or 2 ticks from my entry point. And then I was able to start trailing my stop. Once it got to 10 ticks in profit, I started trailing my stop, and then I was able to lock in 24 ticks in profit. But you guys see it, right? It's the same thing again and again and again. And right now, you'd be looking for a short. Now, you know, when you'd be looking for a short in here right now because you got a red background, so you'd be looking for the short in here right now. Let me move that. And this is actually a good spot to short it right here with the red background. You would be looking for a short, and right here is your 50% retracement. You just came out of the overbought right here, so you'd be looking for the, you would have shorted right here on the down close of this bar is where you would have shorted. So you can still short it right now. You can still short it right now. Based on the 19 range, you can short it right now. Now I just shorted it right here based with a seven range stop. So my stop on this needs to be actually a lot more than that. That is 8 ticks, but I guess I'm gonna get to move to break even anyway. My stop should be on a 19 range. It should be 25 ticks. So it's gonna be up there somewhere, but it's gonna work out for us anyway. I think we'll be able to move the stop to break even in just a minute. It should get at least down to this point right here at 33.5. But my stop should be 6 points away, roughly 39.50 up to 40. There it is. We're going right to break even now anyway. All right, and there's the point. The minimum that it should get down to is right there. So I'm going to start locking in some profit on this one. There's another 8 ticks. That's $1,000 right there. $1,500, 2,000, 2,500, and I'm out. 2,500. Bang, just like that, right? And Masood said he thinks I should be over 10K because yeah, I'm on the day I'm way over 10K. You know, this morning I was at 13K, I think 13 and a half. That was just this morning, but I just add another 10 on it right now. I mean, now I know it's easy 10. But you see, it's not that complicated. I mean, you can make it as complicated as you want to, but you don't have to. You have all the tools right here in front of you. This is not hard to do. It's not hard to do. And don't get... All right, let me slow down for a second. I've been talking now for 47 minutes. If you have not taken a free trial with us, let me do this part again. Okay, go here to tvtrades.com. Click on any one of these things right here. Any one of these things. All right, it's going to bring you down to the bottom. $25 a week. I just made like 10 years worth right here. $25 a week is all it takes to get started. All right. You do the monthly if you want for $90. You can do the annual for $9.97. Literally, I made 10 years worth in this session in the last 47 minutes. Now, I'm keeping the price low so you can all do it. So price is not a barrier. All right. Yeah, I know I make it look easy, but that's because I have complete confidence in it. It's because I do it all the time, day after day after day. And if you guys like me doing this live trading like this, then join so you'll have the tools so you can do it with me. All right. It's not expensive, and it's, you know, you could do this. You could join and only do this live trading with me. If I do this one day a week on Wednesdays for a half an hour every Wednesday, you would make back your money every Wednesday. Easy on a single trade with a single contract in micros. It's, you know, it's not that complicated. I know I make it look easy, but that's because I created it all and I have a pretty good idea what's going to happen next. But what I'm trying to show you is how you can get a good idea what's going to happen next. You know, like right here where it did 100% retracement of this right here. I got down to the bottom, swing low, and it failed right there. So now if it pulls back up here, this is 100% retracement of this leg down. So right here, if you were going to be aggressive, you could short right here. All right, it's 100% retracement of this leg right here. It had resistance right here before. It might have resistance right there again. It just went into the overbought at that spot. Okay. Look for the places where it finds resistance and support, and look for the tools to give you the indication of whether you should or shouldn't take the trade. Okay. Ralph, I start trading at 9:27. 9:27. And Harold asks if it works better for me on the ES than on the NQ. Let's just look at this, Harold, okay? These are my results with the NQ, and these are my results with the ES. So I mean, you can look at any month to see what the results are. So far with one contract this month, they're about the same. I have 737 on the ES, 915 on the NQ. Right now, gold is what I'm killing it with. Killing it with the gold. But last month, the NQ was 7,900. The ES was 11,600. The gold again last month was 11,410. The month before that, the NQ is where I killed it. 13,930 on the NQ, only 6,000 on the ES, 3,900 on the gold, 2,800 on the Russell. The month before that, usually the NQ is where I make the most money, right? Usually, but when the markets get really volatile, I just don't trade the NQ because it's not liquid enough to trade multiple contracts. Okay, so this spreadsheet, you guys can all have access to this spreadsheet if you want. I can share this out to you all. Copy the link and say done. I can share this out to you all right now, so you can all have access to it if you want. And Harold said I can't trade them on the same time when I choose each contracts. I trade the same time all the time. I trade, and let me show you that too. I trade from 9:27 in the morning. That 9:27 is important to me because I usually get my goal for the day between 9:27 and 9:30 every day. All right, I usually get the goal between 9:27 and 9:30. See all these ones right here that say number 1, and this is the number of minutes, but the number 1 in here, so I get the goal on the first trade of the day. Right, that's the number of trades it takes me to get my goal every day, and this is the number of minutes it takes me to get my goal. Any one of those that is 3 minutes or less means I got my goal between 9:27 and 9:30. There is something, and the Russell, Harold, and the Russell. There is something, I have worked it out. I worked it out trying different times, starting at different times during the day, and I figured out 9:27. If I have a trade at 9:27 that sets up using our tools, that sets up at 9:27, I can usually get my goal on that trade at 9:27, between 9:27 and 9:30 on most days. I mean, look at this day. There were 19 business days in this month. This was last month. 19 business days. And out of those 19 business days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 out of the 19 days, I got my goal in the first 3 minutes. Now, that goal for me with 10 contracts on is $1,000. With 10 contracts on. With 1 contract on, it's $100. But if you look at these over here, very few of them were actually 1,000. So that means the trade that I was in, it gave me more than the minimum goal when the trade closed out. I mean, some of them are really big. Like that's an NQ 75 tick trade right there. That's what that is. Okay. What range? What on the gold? I use a 9 range. Okay, on the gold I use a 9 range. If I go back here, this is what I use in the morning. All right, it's just like this in the morning. And on the gold I use a 9 range. On the Russell I use a 19. On the ES I usually use a 7 on the ES. I got it on a 19 right now for what we're doing. By the way, this right here is a good spot to buy. It was a good spot to buy right here. You guys see that? The entry point would have been right here at the midpoint. That was a good spot to buy it. If you can bring this all the way over here. It would have been right there. It's too late now, but it would have been a good spot to buy it right there. And I'm going back, Bobby. So I'm doing that actually pre-market starting at 9. Yeah, starting at 9:27. You can call it pre-market if you want. It's 3 minutes pre-market. But the margins are still the same. And with day trading margins at that point, Bobby. And that's a big deal because if you're trading 10 contracts, when you have overnight margins, like right now we're on full margins for gold, so I got to have like 150 grand to trade 10 contracts. But and Tam Joe said today passed 2 100K prop accounts thanks to the system. You are welcome. It's working, and especially for you guys that are doing prop stuff. You guys that are doing the prop firms, a lot of you guys are killing it with this stuff. I mean, this is perfect for that. All these tools that I'm using right here, that I'm showing you right here, is perfect for the prop firm stuff. Because look at all the trades that I've taken in here. In this session, I don't know how many I've taken, but they're all on the ES, and I can go back and look and see how many I took. Hang on. Let me see. Hang on, let me get this out of the way. Oops, I'm clicking on the wrong thing. Okay. So it looks like I'll just go by the number of canceled ones, because that will give me an idea. Since I picked up the trading again in this session, there's 1, 2, that's not going to work. Okay, so 1, 2, 3, 4, 5, 6, 7 trades I think I took. And one of those stopped out, and the stop out was a mistake. I stopped out 10 ticks on that one, and I've had several that were more than 10 ticks. So in this session, I've managed to accumulate quite a few ticks, especially with 10 contracts on, and that was just on the ES. All right, 2 100K prop accounts, awesome. And on the NQ, I actually use a 47 range on the NQ. I changed it to a 47 range. I use the same risk management for it, and let me show you guys that. Okay, if you go here to targetviewtrades.com, if you're already a subscriber to TV Trades, you should know about this page, targetviewtrades.com. The weekly meetings that I do are in here on the home page. You can always sign up for the weekly meetings here on the home page. Ronnie, did you get in here? Ronnie didn't get in here. You can always go here to sign up for the weekly meetings. All right, sign up for it right there. But also in here, I have the trigger right here. This is right here, okay? This is a video about how to use the range trigger, the optimized range trigger. I have the sniper, though I'm not focusing on the sniper right now, but when the sniper came out, it's really good. You can go under more over here, and under here I have risk management. If you click on that, these are the range bars that I use. All right, this is the risk management that I use for the different range bars. Like for the 7 range that I'm using in here right now, I have a 10 tick stop that trails to break even after 4 ticks in profit with a 30 tick profit target. All right, and for the 9 range that I use on gold, I have a 15 tick stop that goes to break even after 5 ticks in profit with a 30 tick profit target. For the 19 range that I was using on the Russell and on the ES for that one trade, I had a 45 tick profit target. Well, I'd like to have a 45 tick profit target, but I have a 25 tick stop that goes to break even after 10 ticks in profit. And for the NQ, I was using a 50 range, but with all the stuff that's been going on, I have I bumped it down to a 47 range because it's easier to do the math. If you're doing the conservative trade where you're going to buy or sell when it comes out of the overbought or out of the oversold, then you can be proactive with your order and you can say, okay, if this bar is going to close, you know the next bar, like this bar right here, I could say, okay, if this bar is going to close up, then I'm going to go long because it's going to come out of the oversold. So you know where the bottom of the bar is. If I use a 47 range, where you want to have your buy stop limit is 12 points from the bottom of the bar. If I use a 50 range, then it's 13.5 points or something like that. It's 12.5 points or 12.75 points, but it just makes it easier to do the math. Okay, Harold, you asked me that one. Okay, and Mark, I answered your question right. And do I know that the indicators in Ninja are given different signals in Trading View? You can send me a screenshot, but it's Ninja Trader, and I really don't care what Ninja Trader gives for the indicators. I'm not doing this stuff on Ninja Trader. All right, you can trade on Ninja Trader. You can use the Ninja Trader DOMs and stuff like that, and I have some stuff I can give you to help make that better, make it a better experience for you trading with range bars. But as far as the charts on Ninja Trader, I really don't care what they're showing. I'm not putting this stuff on Ninja Trader. Okay. And it's a different platform. It might be just a little bit different, but Masood, I don't have these indicators on Ninja Trader, so you're not going to see the same thing on Ninja Trader. It's not going to be the same. If you were to put like a simple moving average, like if you're going to go in here and put like one of these guys on here, a simple moving average, that should come out as a 9, right? If you're just going to put a simple moving average on between here and Ninja Trader, it should be about the same. It might be a little bit different, but it should be about the same. But either way, it doesn't really matter. You're not trading off of Ninja Trader charts. You can trade on the Ninja Trader DOMs. You trade on Ninja Trader charts. Trading on the charts and trading on the indicators on the charts are two different things because I don't have these indicators on Ninja Trader charts and I'm not putting them there. Okay. I want to make sure I answered all the questions so far. It's now 3:30, so I've gone for a full hour now, and I have a half an hour left. So I really want to take some time to explain it, but I guess I've been kind of explaining it as I go, right? All right. So what the heck did I just do? I just undid something here. If I click on the ES, It's not showing all my entries now, but I guess we could go back and look at all the entries that I took. Anyway, let's go back here and see if we have any more trades coming up. Okay, so looking across the other markets, let's look at the DOMs on the other markets and see if we still have a spread. We do on the NQ, so I'm not going to trade the NQ. This is the ES, which is what we've been trading, so I can still trade the ES. Let me do the window on top thing again. The Russell's almost okay right here, and the gold isn't too. The gold's got a 2-tick spread, so we're not going to do the gold, but the Russell isn't too bad. Okay, so the Russell's on a 19 range, has a 25-tick stop with a 40-tick target. All right, the ES, well, the ES is on the DOM is set up for a 7 range. I can set it up for a 19 range. I will set it up for a 19 range. Hang on, let me set it up for a 19 range. Here, a 19 range has a 25 by 45 bracket. Okay, it's got a 25 by 45 bracket on it. And there. Okay, so now the ES is set up for a 19 range. We don't really have any place to trade right here, but if you were being aggressive, because you're in chop right now, if you were being aggressive, then you could have bought the open of this bar right here. All right, if you were being aggressive, that's what you would have done. You would have bought the open of that bar right there. Okay. Let's see. We don't have any trades right here, right at the moment. Everything's getting kind of choppy. So let me slide this off to the side. Now, one of the questions before I put on the TV trades on 19 range ES is it red shade downtrend? Yeah, red shade is downtrend and blue shade is uptrend. Okay, if I put that back on. But if you're going to be doing that aggressive trading, well, I guess if you're going to be doing aggressive trading, you would have shorted the open of that bar right there. If you're doing the really aggressive trading, then you'd have the other thing going down here. I can't believe I couldn't turn that on. I don't know what I did wrong on that. Let me put a, you know what, I think I can just put a fresh one down there. I just put a fresh range trigger down there. Then go in here, and I guess I got to put the password in to turn that on. What the heck did I do with that? Okay, div area. That, I think I got to put the password in to get the div area to work. Well, you know what? I can just put the password in. And let's see, go over here to that. Okay, so that worked. Now put the there it is, the div line and the div area. Okay, so we changed the div area to a line. I don't know what I did to that one. But if you change the div area to a line, then you can be really aggressive. And right now, you still just want to go when the blue is leading into the overbought or oversold. All right, when the blue is leading into the overbought or oversold. And for that, I want to shut off the conservative trades. Shut off the conservative bars. And I guess we can go in here and change this to be just all blue. Okay, just change that to be all blue. There, so when the blue's leading into the overbought or oversold, being really aggressive right now, regardless of the background color, Wayne. Okay, being really aggressive regardless of the background color. That's when you would start taking the trades in here, in this kind of chop. All right, so right now they're both going into the oversold together, so you're not going to take a trade. If you get another down close on this in the bar links, there's too many bar links to be doing the aggressive trade, and you want to be into the conservative trade, except for the pullback. All right, now that's kind of key that what I just said right there. You'd be trading with the trend, right? You can be aggressive going with the trend on the pullback if it happens to go into the overbought and hit the 50% retracement level at the same time. Those are a lot of words. These are nuances. That's a nuance. And you could have one happen right here on the NQ. If this bar closes up, this next bar closes up, you could sell the NQ on the up close. Okay. It's going to take 2 bars over here on the S, but if this bar were to close up right now on the NQ, you could sell it. If it doesn't go down anymore from right here, and it were to close up on the NQ, you could sell it on the up close right there. You could sell it right there, like that. Okay, once that number equals 50, then the stop goes to break even. I think it already did once, but it should go down again. Nope, it went up. It did already go down. And it did already hit 50 once, so I'm going to bump it here to break even because I should have gotten out of break even when it went down this far. But that's it. That's all you have to do. All right, that was the aggressive short right there. When it pulled back up here, and let me show you what it did. All right, in case you guys didn't notice it. It pulled back right here to the 50% level. When it went into the overbought, it was at the 50% level, so I shorted it. Now I could have taken some profit on that if I wanted to. That was trading aggressively. That was shorting aggressively. Okay. Now, I eyeball this stuff a lot. You know, you can use the tools if you want to use the tools, but you don't have, I mean, I'm going to talk the tools. I'm talking about the retracement tool. You can use the retracement tool if you want to, but, you know, I eyeball it a lot. And I'll say, okay, ahead of time, I'll say, okay, well, this is what we're looking for. We're looking for a pullback to this level. So, like, right here, I got to explain something else to you guys right now. Okay, before I get into it too deep, any deeper, I should say. One of the questions you're going to have is, well, where do I draw the legs from? You know, where do I start the top and the bottom from? Right? When you're retracing, when you draw on retracements and all that stuff, that is a question that you guys are going to have. And I'm probably, I said it before, and I'm going to say it 100 times more, 1,000 times more. I made a video about it this morning. If you're in a downtrend, when it comes out of the overbought right here, and when it goes back into the overbought right there, those are your key points. This is where you start it, and the low before it goes back into the overbought is where you end it. All right? You get that? This is where you start it. This is the other key point. The low is going to be the low before it goes back in. So it's going to be right here. It's going to be the low is right here. So you start it like this. From this key point right here. You pull it over to get to that key point. You see this key point right down here? You pull it over till you get to that key point. Then it's the low right there. That's your low. So this right here. If we didn't have the background color on, you know, if we weren't going with the trend on this, this would have been an aggressive short right in here. You could have taken. It'd be a conservative short you could take too. But it just flipped to blue in the background color. On a 19 range, it just flipped to blue. So with it flipping to blue, now you got to switch this around. Okay? And now it's from here to over here. If you get a down close on this bar, all right? So it'd be like this. And that would be good. If you get a down close right here with the blue background, that would be an aggressive long trade you could take on the open of the next bar if you get a down close on this bar. Do you guys see that? Okay. Again and again and again. It's the same thing over and over and over and over and over and over and over every day. And, you know, those numbers that you see on here, these are real numbers. These are not just pie in the sky stuff. These are real numbers. I've made more than that in this session just about. I probably came pretty close to making that in this session. But, I mean, they're real numbers. And, you know, even if you're only doing one contract, then just take off the 5. It's $1,897. And if you're doing a micro, take off the 0.75, take off the 75. It's $189 or $190 if you're doing micros. You know, it's not that hard to do. Okay, it's the same thing again and again and again. If you guys haven't, if you're not joined yet, if you're not subscribed yet, I don't know why. This is simple stuff, and you're not going to get any place that's going to give it to you any cheaper than I do. And actually have me to go with it. I think that's part of the bonus too. All right, it's 3:40, so we have 20 minutes left. So you see right in here, that was the perfect space. If it would have given us a down close right there, that was a perfect spot to go long. It's gone up to the prior swing high right now. So you might get another shot at it here. It's going to take 2 bars to get back down here. So the aggressive trade wouldn't have worked. It didn't get actually all the way into the oversold. So you didn't get a conservative opportunity. But if you get a down close on this one right now, you have some chop right here. So this would be aggressive a long trade. If I put the colors back on, the background colors were in blue right here. Okay, so you'd be taking a chance here when it goes down into the when it gets down into the oversold. You'd be looking to buy the open of the next bar. All right, it's in a little bit of chop right here. It should go right back up to the chop. Now, there was one thing I had done a couple months ago about trailing stops, and I've done so many things about so many things. But there's one I had done about trailing stops and about the different kinds of chop, right? And there's 3 different kinds of chop, right? There's my drawing tool. There's channel chop, where you just chop up and down in a channel like this, and that's what we're in right now. We were in right there. Channel chop, like that. And then there's triangle chop, where you chop like this, but then it diminishes until you break out of it. And then there's bugle chop, where it chops like this. Okay. This chop right here is the hardest chop to trade, but it's the best chop. Well, it's the hardest chop to trade because you don't know where the top or bottom is going to be, but it's really good chop for trend changes. Okay, it's really good chop for trend changes. Now, look at this big move we had just right here. So this is our leg up, right? Starting here, we're going to look for this to get down into the oversold. It'd be great if it got down to the oversold right there. That would be a great spot to buy it. Now, it's not going to be an aggressive trade down there because it's going to take more than one bar to get there. So it's going to have to go down into the oversold and go sideways a little bit. You're going to have a flat spot for that to happen. All right. You're still looking for the same thing, but it's not going to be here anymore. It's going to be up here now. Somewhere like that, I think. From here to here. No, it's still pretty close, right in this area right here. Okay. After that big move up, that's what you're looking for. Let me draw it for you. Okay. Right here. See, I was just eyeballing it, but now I can really draw it and show you. Now it's moved up some, so now you're looking at right there. Okay. And this could be, it's not going to be an aggressive trade, all right, because you're going to be in the oversold right here. So it's not going to be an aggressive trade. It's going to have to go down and get into the oversold and go sideways a little bit. You're going to have a flat spot. You have to be conservative coming out of the flat spot. All right, do you see that? Hopefully you see it. And it's not there yet, but it's getting there. What market is this? It's ES. Okay, so where's my ES DOM? Here it is. So it's getting there. It's going to take a couple of bars to get down here to this level. It might not even get there, but that's what I'd be looking for. All right, a down close on this one, a down close on the next one, and a wick on the one after that would work. There, down close on this one right now. Now, I don't want to be aggressive on this, right? We want to give us a down close. Now, a wick on this one and an up close would be perfect, right? So this is a 19 range, so it's 5 points from the bottom of the bar. So it's a 55 up to 60 is what I'm going to buy right here, right there. Okay. This would be perfect right now. There it is. It should have just filled me, but it didn't. So I'm going to buy right there. And why do I have one contract on? Oh, it's because I switched the bracket around. Crap. All right, so I only have one contract on this time. But this is the perfect spot to buy right here. All right. And we'll see. It's got to go 10 ticks into profit. And let's see what happens. There it goes. Stop going to break even. The stop to break even. I wish I had 10 contracts on, but I'm going to lock in 12 ticks right there. 16, 20, 25. Alright, I'm out with 28, I think. But did you see how easy that was? I mean, it was really easy, right? It wasn't hard to put that on. None of that was difficult. Okay, can I put the TV trades and yellow arrows on? I can. There it is. Okay, now this, I'm not exactly sure what this yellow arrow is referring to. It's not doing the right thing with this range trigger right here. It should be pointing when this goes into the oversold. This one right here is not, so I don't know what's going on with that. But this one did right. This one did right. Yeah. Anyway. See, like right here, this went up to this point right now. Now, this is important. Right here, this is really important that you see this. You see this went 50% back up there. Now it's breaking down below here, so it just changed trends on you. Now, I don't know if you put the colors on, if you see it. No, the colors didn't change yet, but this is a trend change right here that just happened. Okay, so now it should pull up to here and sell off of here. This would be a spot where you could sell aggressively right now. You could sell aggressively right in there, right now. Why? Well, let me explain it to you. I forgot that it's a 19 range, but you could still sell aggressively right here. I did, and here it is. And I'm going to throw my stop at break even because I think I already should have there. Now I definitely should have. Let me explain why that was an aggressive short right there. Okay. Now, without having the background color on there, the background color is probably going to disqualify the trade. All right. But what just happened here? There's so many things going through my head right now that I want to try to get it out in some way that you'll be able to understand. What time is it? 3:47. Let's just make this the last trade, okay? Because I want to explain this to you. So we had this opportunity here, and it kept going up and up and up, right? And I was drawing these as it was going up, and I was saying, okay, well, when it retraces back to 50% of that leg up, 50% of that leg up, you're going to start looking for your opportunity in there. All right, when it traces back to 50% of that leg up, you start looking for your opportunity. We got the opportunity. We just took 20-something ticks profit on that. All right, right here, got to the midpoint of this leg. Now, ignoring, I'm just working with just straight price action here. Ignoring the background color. We got to 50% retracement of this leg. Of that leg. You see that? What I just did there was the opposite fib, right? The opposite retracement. This was the retracement going bullish. Drawing from the bottom up is the retracement when you're going bullish. Drawing from the top down is your retracement going bearish. And that's why I said right here, ignoring the background color is the perfect spot to go short. All right. And I said, if it fails right here, it gets down below this level. If it gets down below that level, then you have a trend change. Now, it's probably changed in the background color now, but back here it hadn't. But just looking at the price action, you guys see this? Just looking at the price action, it goes up, it comes down, it goes up. And then it came down here, gave you your opportunity to go long and then to reverse it right here and go short. And then it pulled back up, and look what you have now. You have lower highs and lower lows. All right, you back up, shorten again. You could have just shorted again right here at the open of that bar, because that's 50% retracement of this leg down right here. 50% retracement of that leg down. Could have shorted there. Now, it didn't go into the oversold, so you wouldn't be doing anything else right here, but you could have shorted from the open of that bar, and that would have been another 20 ticks. Do you guys see that? But I'm showing you everything that I'm doing. I'm showing you exactly what I'm doing. I mean, you're watching me do it. I'm doing it right here in front of you again and again and again, and it's the same stuff over and over. You know, if you join, if you like this session, if you like me doing this live trading on Wednesdays, then join, pay the $25 and join. And you can come make money every Wednesday with me. Right? Get the tools on your desktop and learn from what I do in here, and then you can practice and do it on your own. You know, I just read off to you what the Tam Joe group said a little while ago. Here it is right there. I passed 2 100K prop accounts thanks to this. 2 100K prop accounts. So they're in there making a ton of money every day using prop firms. And they're not the only ones. You know, we have people that are making money on actually 5 different prop firms now. 5 different prop firms people are using with my stuff. So, you know, in the past, I mean, those of you guys who have been with me for years and decades, you know how I'm associated with CFRN and Dwayne and all that stuff. And Dwayne has always sworn against the prop firms. That's because he never did it. and never had any experience with it. And I've really never done it either. I did sign up for one for a month because they said they had they had trading view charts, and I wanted to see if I could get my stuff on there, trading view charts, but I can't. Um, but I understand how they work, and this stuff is perfect for that. It's perfect for that because you don't have the huge drawdowns during the day, and you have a ton of opportunity pretty much any time, and you can trade anything you want. Okay. When I trade one market, can you see them? I've been trying to keep my ES DOM out here for the most part. Like right here, we want it to pull back up to this level right here. We want to see it get into the overbought at this level, right? Oh, that's not quite it. Now, because it didn't get into the overbought right at that level, and because it has a gap right here, I want to see it fill the gap and then give me a down close. It'd be a conservative short right here. If this bar closes up and the next one closes down, I will take that trade. Okay, Masood? Can you copy trades across 5 different prop firms? I don't know. I don't know if you can copy them across any prop firms. Mark, I really don't know about that. All right, so we want this up close, and now we want a down close. All right, so we got the high here of 41, so we're going to sell 36. 30, now it's going to be from 40, now it's almost too high. It's not too high. I'm going to sell 39 right now. Okay, am I still on one contract? Yeah, I'm still on one contract. Let me close that. Come over here and fix that. Hit cancel all on that, and come over here and fix that, and go back to 10 contracts and fix that, and there we go. Alright, so now it's retraced too far to want to do the conservative trade from right here, but if it does do 100% retracement, I do an aggressive short from 100% retracement. So if this closes up another bar or two, I do 100% retracement from there. But a down close from right here, it might be okay. It might be okay. Let me draw the fib and see. Yeah, it's not going to work. If it gives us an up close on this bar and the next bar, then I would be aggressive and short it. All right, but a short from right here is going to be a little bit more risk. Okay. Okay, you just got a yellow arrow in here, and it's suggesting a short. So you got the yellow arrow back here, I believe, right? If I turn this back on, yeah, you get the yellow arrow back here. That's where you should have gotten a yellow arrow. And now it's gone back to long. All right. So now in this scenario right here, you want it to go down 2 bars and give you a long trade from right here. You're taking an aggressive long trade from right here in this area. Okay, right here. If you had 2 down closes, so I had 1. Now it's not going to work out that way because this bar is going to close right here at the bottom of that bar. That's not down far enough. All right. So you're going to have to wait. You won't be able to do the aggressive one. Tamandro says Apex sells a trade copier that you can use, and there you go, Mark. You can with Apex, okay? And Joe says yes, and all right. So all you guys that are trading with Apex, you all just agreed to the same thing. You can do the trade copier thing, but I think the question was, can you do it across 5 different prop firms, not 5 different accounts within a firm? That was the question. Up to 20 different accounts within Apex though, right, Joe? But you couldn't go from Apex to like Top Step to something else, because I mean they're not even the same, not in the same platforms in the background. Masood says there is a company that can do that with different prop firms. I don't really know. The prior 2 yellow arrow on the short made good money. These guys over here, you mean? Yeah, they did. This one too, the prior 3 arrows. If you skip that one, these prior 3 arrows did. Alright, so now we're down to that point right now. We want to see this bar close down and you can be aggressive on the long. Alright, if we get a down close on this bar, I'll just buy it. Alright, but we got to get the down close. It didn't happen. It could still happen. A down close on this bar will put it into the oversold, and if it did happen, I'd just buy it. Okay, but now it's not going to be as good, because now it's starting to run a little bit. But you guys see it, right? I mean, this isn't that hard to see, is it? All these trades that I'm taking, and I mean, I've made money on almost every one. Yes, and I know I make it look easy. It's really not that hard, really. Okay, so we had a nice run up right here. So now things are going to change a little bit. Not that much, a little bit. You have to go from where you went in to where you went in again. All right, so let's get rid of this guy. And we'll start over again. So a down close on this bar will put you right here at the 50% retracement. You can be aggressive with that. You're in blue background. You can be aggressive with that. Okay. So you guys see all this? Yeah, when I started this out, I said I wanted to teach you guys. I mean, you can be a robot and just take the trades whenever you get the yellow arrow. You can do that if you want to. All right, and that would have worked out well. Most of these trades, that would have worked out really well. You know, if you do choose to do that, you have to be very careful that you don't overtrade. Okay, because it's easy to just sit here. I mean, there's probably 10 of them right here. And out of those 10, it looks like 7 of them are really good trades. Now, you probably had a couple of stop outs, and the rest of them are really good trades. But you just being a robot, you just trade and win it, you know, when it gives you that. And that's okay. That's okay. That works. But, I don't know. The way that I do it, you have high probability entry positions every time. You don't have deep drawdowns. And you have clear profit expectations on the trades. Okay, do I always use a fib tool or do I usually estimate? It depends how fast the markets are. Mark, you know, how much I've been getting your stuff to break even fast enough. Joe, are you using Sierra? You have the move stop to break even thing right there? Ah, okay. Okay, we gotta get that. Bert actually just texted me a little while ago. Do we have a button on Sierra for moving the stop to break even? I don't have a button. There is actually a button. There are 3 ways to move the stop to break even. There is actually a button to move it to break even, but it's on the panel that I don't show. The extra panel that goes over here. There is a button for break even on that. And you can do it this way, and I have a keystroke that also does it. For me, break even is Control Z. Moves my stop to break even. Masood said if you go to trades with an S, tradescopier.com. Tradescopier.com. Masood said you guys can trade across different. Mark, I guess that's for you. You asked that question. You can trade across different prop firms. Tradescopier.com. I would not trust that at all, but that's just me. You know, years ago, like 15 years ago, I went to CTA, Commodity Trading Advisory, and in that, I traded multiple people's accounts, and so I had sort of a trade copier thing, and it never distributed things the right way. But I guess if it's just your account, then you don't care that much. But if you're doing it for multiple people, and some people are getting better results than other people because it's distributing it differently, those people care. It was way too much hassle, too much red tape. Not worth the money to me. You are a visual trader, so you like to see your trades ATM on the chart. Is it hard? Is it hard for you to see your trades using the DOM? It's not hard for me. I mean, if you trade on the chart, you can still trade on the chart. What chart do you trade on, Luis? What platform? Ninja. Okay, then do it on the chart on Ninja. You know, you won't have the indicators on Ninja, but you still have your Ninja chart. Just trade the way you want to trade. You know, you can trade on the chart here with TradingView too. As a matter of fact, trading on the chart with TradingView is probably the best way to trade with TradingView because their DOM sucks. But with NinjaTrader, you know, if that's the way you like to trade, then trade the way you like to trade. You don't have to use the DOM because I'm using the DOM. You know, the DOM is all I've ever used from the very beginning, way back in, you know, before we had charts. Well, actually, it was after we had charts because we didn't have DOMs before we had charts. But anyway, I used to use a phone way back in the day. I used to use graph paper and a pencil and a ruler and a phone and trading in the pits. And I was paying $500 a side trading in the pits for commission. Anyway, that's neither here nor there. It is 4:01. Wow, I ran over. Okay, yeah, I will show you that right now. How much does one NQ cost? To place a trade right now, I think the NQ is $1,000 is what the margins are right now. Joe, I'm pretty sure that's what it's at right now. And man, just a minute, I'm wrapping. And yeah, so would I have time to do this in your charts at some point? Yes, John. Yes, I will really try to get to you because I know you've been waiting for a little bit. Daryl, they're just a retracement to 50%, but not oversold. Is that valid? But not into oversold. Is that valid? So you're saying if it just comes down here and hits it, do you buy it right there without it going into the oversold? The oversold is what really sells it for me. That's the confirmation that you need, Daryl. And Larry, you wanted me to show you how to do that, right? Can I show what the setup is for the 50% retracement tool? You just click on retracement, right? And you draw it. And in here under properties, this is the way I have it. I have the 0, the 1, and the half. That one's maroon. This is kind of bluish, and that's kind of bluish, the same color blue. But you can make it whatever color. I think I had it white when I started this session. You can make it whatever color you want, just so it differentiates for you so you can see. Okay. Did you get that, Lara? It's in the recording. It'll all be in the recording. Oh, that's another thing, guys. This recording, when I'm done here, it's going to be sent out. It's going to be in YouTube, and then from YouTube, it'll end up on this page. If you go to upcoming and past webinars, this is at targetviewtrades.com. It'll be on this page, upcoming and past webinars. Go under more, upcoming and past webinars, and this was last week's webinar, I guess. And so I'll have this one will be right here, and this one will be moved down. All the ones that I've done in the past are all down here, guys. If you want to go through all these ones that I've done in the past, there's a lot of good stuff I've done in there. And if you have any questions about any of the stuff that I've done, it's in there. And if it's not in there, look in the YouTube channel. Okay, because there's a bunch of stuff in the YouTube channel that I don't have in here too. Okay. Again, if you haven't taken a free trial with us, go here to tvtrades.com and scroll down to right here to the orange thing. Click on that. It's going to bring you all the way down to the bottom and fill it out. Okay, and fill it out. Now, when I'm done, I'll try to figure out how much we actually made during this session and see if I can figure that out. Maybe I'll stick it in the screenshot that I put on the recording. But this recording is going to be here. Okay, so you guys will be able to go and see that. What do I usually trade first thing in the morning? Johnny, I trade everything first thing in the morning. Whatever is triggering first thing in the morning. Lately, it's been gold. Gold has been the one that I've been getting my goal on. It seems like the last couple of days. Today I was up 14 ticks in my first trade in gold, so I was up $140 a contract, or $1,400 this morning after like 4 minutes. All right. I think I answered everybody's questions. I'm going to wrap up the recording right here, guys. Again, if you haven't taken a free trial, take the free trial. And if I start doing this stuff on Wednesdays, I mean, how much money did we make in this session? You know, it pays for that. Probably made a year's worth in this session. In any one of the trades that I took, I only had one stop out, and that was a mistake. But that's it. All right, let me stop the recording here, and let me do that part first.